Okay, good morning, everyone. Welcome to today's Coffee with Marcus and Mark. Marcus is in Southern California and he is going to try and pop in, but we're not quite sure. He should be with us tomorrow. So we're going to run through some things today. It's going to be a great session, and we're going to focus on PowerX today and stock trading. We'll have a little Q&A. There's a few things that I want to take a look at, some of the questions that have popped up before, and I thought it would be a good use of our coffee with Marcus and Mark, with Marcus potentially joining us a little later. So I hope everybody had a great trading day yesterday. I hope you're ready for a new, wonderful trading day today. And what we like to do in these sessions is just kind of give you a little insight into what we're focusing on, what we're looking at, and tackling some questions that might pop up based on the tools and methods that we use here at Rockwell Trading. So I do have my chart set up for binary option signals. We'll see if anything pops up at the open. Right now, no. And as many of you know, if you've joined us before, we like to day trade futures. We like to trade binary options using daily expirations, and we like to swing trade stocks and options. And so I thought today would be a great session for taking a closer look at the PowerX analyzer and going through a couple of examples and things that have popped up. Now, let's first take a look at ABIO, Abiona Therapeutics. Now, this is a stock that popped up on the scanner, and just for clarification, the scanner results are going to be based on the optimization criteria that you use. These are the default criteria that we are currently using. So profit level or ROI of 60%, closing price between $5 and $250, a profit factor of 3, reward risk factor of 1.5, so we're looking to make 1.5 for every dollar risked at a minimum number of 12 trades and a minimum winning percentage of 40%. So these are the default criteria that we like to use right now. Once you have some more experience with the software, feel free to adjust these. If you want to have more stocks to analyze each day, you can lower the ROI to get more stocks to consider, or if you're not concerned about a minimum stock price or a maximum stock price, then you can adjust that here. Same goes with the profit factor, risk reward, and the number of trades and the minimum winnings percentage. Now, I would keep the minimum trades at 12. That's one thing that I wouldn't suggest adjusting. That's just because we want to make sure that during the last year, there were a minimum number of signals to consider. We don't want a stock that has just been trading for 6 months and then has 2 signals, right? Because you might see that with those 2 signals, it was just the best performance ever, but 2 signals isn't enough to really analyze data with. So I would say that even though you might consider adjusting some of these other criteria based on your experience and based on what you're looking for, the minimum number of trades, I would keep at 12. That means that at a minimum, you're getting 1 signal a month, but you could have more. Like we have here with this stock, ABOE, that popped up. And with ABOE, this was a consideration. And we had a couple people that mentioned this one, even a few mastermind students that said, hey, this popped up and it's a little interesting. And let's look at the numbers here, because it is a little interesting once you take a look at the numbers. The profit target is $19.34. The stop loss is $1.76. The risk reward is 1 to 11. So we're looking to make $11 for a dollar risk. I mean, this is a fantastic risk reward ratio. The total profit or ROI is 157, 158%. 10 wins, 12 losses, 45% winning percentage, profit factor 3.76, average win $390, $391, average loss $86, $87, average trade length 10 days, and the longest trade was 28 days. So if we look at these numbers, the numbers are pretty solid, right? The risk reward ratio is awesome. I mean, 3 to 1 is fine with me, but here we're at 11 to 1. The ROI for the year is very impressive. Wins, losses, yeah, the winning percentage is slightly shy of 50%, but if you have a winning percentage of 45% and you're making $11 for every dollar that you're risking, that's great. Now the profit factor is above 3, so this tells us what really happens, right? Because we might close trades before the 11 to 1 ratio is hit. Maybe you don't quite hit that full profit target, or maybe there's a reason to get out for a small profit or small loss because of a black bar. And that means that even though we're looking for a pretty aggressive target here, the profit factor tells us that we made $3.76 for every dollar risk rather than the 11 that we're shooting for. So it's nicer when we see that this profit factor is a little more in line to this 11 to 1. But the real thing that stands out with this one is that the sell signal is to sell to open at $15.99. And the profit target is $19.34. So we're actually looking for the stock to go below 0 based on the profit target. Is that likely? No. Is it possible? No. So this is a scenario that comes up every now and then, and it throws traders for a little loop, right? Now we could put some programming language here to say to just throw out this stock, right? And we considered it. However, there are some scenarios that make a stock attractive even though the target is aggressive or might not be realistic. And so that's why we keep it right now so traders can evaluate it. Because let's first talk about how we calculate the profit target and then talk about what to do with something like this. The profit target is based on the average daily range. So based on the average daily range that we've seen, we take the average daily range and we see what type of profit target and what type of stop loss is appropriate for the stock that we're analyzing. And so that average daily range has said, hey, based on the movement that we've seen, and you look back here and you're looking at the target and stop, the best target for this stock is 1934, right? And it doesn't consider the entry price here, and that's where you have to use a little common sense and say, hey, is it realistic to go for a $19.34 profit target if I'm shorting at $15.99? No. So a good rule of thumb, when in doubt, stay out. Just move on to other opportunities. There's going to be plenty of opportunities. Maybe not today, maybe not tomorrow, but during the week, yes. During the month, yes. So if something just doesn't look right, there's no reason to force it and just get into a trade for the sake of getting into a trade. However, the reason why we don't just automatically program things to exclude this stock is because the average daily range and the target, that's just a calculation that's popping up based on the analysis. Now, taking an extra step and looking at this particular stock, if I see that my target is basically going beyond the value of the stock, but I see that the risk on this trade, right, we're risking $1.76. If I see that I'm risking $1.76 and 2-3 times my risk is realistic, right? So let's say the stop loss is $1.75, just to make it easy math, right? So 2 times the stop loss would be $3.50. 3 times the stop loss would be $4 and or sorry, $5.25, right? So 350 puts us about here, right? Nope, it puts us about here. So 2 times the stop is about here. Is this a realistic target based on the entry and how the stock has moved? I'd say so. And then if we add another $1.75, we're about here. So basically 2 to 3 times the risk on this trade is realistic based on how it's moved. The ranges that we've had, I mean, just looking back 2 months, the 2-3 times the risk puts us back at a price that we were trading at 2-3 months ago. So if I see this scenario and I love the stock, we still need to do the analysis. Is it a gappy stock? Is it a nice trender? Do we like the numbers, the performance report? And if I see everything and I love it, and I can get into that trade, and my target or realistic targets maybe 2-3 times the risk, then I'm still okay taking that trade. I don't expect it to drop $19.34 if we have a target of $15.99. And if you don't feel comfortable doing that analysis, going back to what I said earlier, when in doubt, stay out. There's no reason to force a trade just to get into a trade. There's going to be plenty of opportunities. But this just is a scenario that sometimes pops up, and we could just exclude it, right? Because we're not going to start tweaking the target and stop because of a scenario like this. We could just exclude it, but I would rather have it there as a candidate to consider and then make a decision on whether or not it's something to trade. Because remember, we have 3 reasons to get out of a trade based on the PowerX signals. You could get out for a profit target, you could get out for a stop loss, or you could get out for a crossover. That's when we get a black bar. And so if this stock does drop and we have a crossover exit, there's still the potential to lock in some profits on that one. So just a great candidate to discuss today, and I thought it was worth looking at. And I hope that that explanation makes sense. Again, step 1, when in doubt, stay out. Step 2, if you see that the target is aggressive or based on how the stock has moved, it just isn't realistic. If we can still get 2-3 times our stop or our risk realistically, it still could be a valid candidate, right? If instead of a $19.34 target and $1.76 stop, if I was looking at like a $6 stop, see, the risk reward is still pretty good with a $6 stop, but getting now we're in more of a 1-to-1 ratio when we're looking at what's easy or capable from that stock. I'd rather be targeting 2-3 times the risk on a trade to even consider it. Does that make sense? Okay, good, good. Excellent. So Chewy today popped up. It was funny. One of the guys in the mastermind group said, "Hey, he sent stocks that he's considering, and that's something that we do with the mastermind group." And he's like, "Look, I'm not trying to follow Kramer, but I was sitting there in CNBC, and Kramer was on last night, and here I'm looking at PowerX, and I'm looking at Chewy, and then Chewy pops up on Kramer. I thought that was kind of funny. So yeah, hey." Neil, if you're listening, it's okay. I won't hold it against you for following Kramer. I know you were doing some serious analysis with PowerX instead. But Chewy did pop up, and I actually kind of like this one. Look at how it's trended, right? You have like these consecutive streaks of green, a little black, consecutive streaks of red. It's not really a gapper. It seems to trend pretty nicely. If we look at the performance numbers, $3.12 target, 54-cent stop, risk reward, a dollar or 1 to 5.75, ROI 69, 70%, 11 wins, 11 losses, 50% winning percentage, profit factor 3.79. So our target and stop, we're looking to make 575, risking a dollar. What's happened over the trading period that we're analyzing, we've actually made $3.79 for every dollar risk. So that's a little more closer to what we're going for compared to the last stock we looked at. Average win $330, average loss $87, average trade length 12 days, 35 days longest trade. So we have a sell signal here, looking to short at 20.59 if we trade down there, going for a $3.12 target. So that's something that I think looked pretty good today. And if we take a look at the options, the at the money, with an entry price of 44 cents here, if it's less than 50 cents, I pretty much consider it I don't want to say throwaway, but if I'm buying an option at 50 cents or less, then I'm really not expecting to close the trade to make money back, right? For me, it's all or nothing. And if we look at the option at target, we see that the option at target is $2.54. So the reward on this trade would be $2.10. So if we buy at 44 cents and it makes the move that we're looking for, hypothetically based on the target, the value of the option is expected to be 254, which would mean that we'd make $2.10. Now again, with options, everything is one option is taking into consideration 100 shares. So this would be risking $44 to make $210. Now we see the option at stop is 16 cents or $16, right? So the risk on this trade, because if we buy at 44, we sell at 16, the risk on this is 28. But this is where if you have some options trading experience, you know that most of the time you're probably going to have a tough time getting out of an option if it's trading below maybe 20 cents. And then there's commissions too. So sometimes it might not even be worth it. So if I see an option that's less than 50 cents for the entry, then I would either skip it or consider being all in. And this is actually pretty easy because let's say that you normally trade $500 option positions, right? With the goal of getting out at $250 if you're wrong. So you're risking about half of what you're spending. Well, if you like an option like this, and you don't want to be stuck where you bought $500 worth of options and you can't get out at 250 based on the stop, then you could just trade half the size, right? So you could trade $250 worth of options. That's basically your stop or what you're trying to get out at with a $500 position. And then if the option and the stock moves as expected, you have a nice profit on the trade. If it doesn't, you already, accounted for that risk, what you were willing to risk on that trade. Does that make sense? I know that some people are real new to options, so I don't want to get too carried away here. But basically, if you're entering less than 50 cents to begin with, then be careful expecting to get out with a stop loss. Normally you're all in, and if you can get out, great. It's not that it happens all of the time, but I always like to consider worst case scenario. What's going to happen with this trade? What's my worst case scenario? And we start buying options less than 50 cents. The worst case scenario is that if it doesn't move as expected, the option is worthless or hard to get out of. Now, in the money, the 2250 strike, the 2250 strike put is a little bit different, right? Because here we're buying the 2250 put, meaning that we have the right to sell the stock at 2250, and the entry signal is 2059. So there's some real value priced into it. We'd be paying $2.05. The hypothetical option at target is worth 503, so 1.5 times our entry, and the option at stop is $1.51. We're paying more for this option and it's in the money, so it will be easier to get out of this trade if our stop loss is hit. And right now it's saying that hypothetically we could do that at $1.51. So when you go more in the money and you're paying more for the option to begin with, it's going to be easier to get out of that option and make or take some of that value back than it is if you're trading a cheap option and one that's out of the money. So just a few rules of thumb there, but I thought Chewy looked pretty good today, and I'll try and pick up some options there. Now, there were a few questions that have popped up, and some of these we might have tackled before, but this is with the question app that Markus uses. So Mike, a couple weeks ago, said if you could show some stocks in the software where you set it at 70% and see what happens. Now, this is where you can do this any day you want. If you go to the scanner, and of course you want to update the scanner. I'm not going to update it now because I already ran it, but to update the scanner, we suggest doing it after 5:30 p.m. you just click this globe button and it's going to reload that scanner. That scanner then is going to show all stocks that have a new entry signal for the next day. And then to run the scanner, click on this optimize list button. It's the stacked green button here. And now you can specify the filters that you want to use. So we like a minimum winning percentage of 40% because we'll have more stocks to consider. And like Chewy, here we have a 50% winning percentage, but I love the risk reward on this trade. And 50% winning percentage is fine for me. But you could specify a higher winning percentage if that's what you're worried about or that's what you would like to do. You're just going to have fewer signals each day. Okay. And then there was a question. This was a while back, and I think it's just nice to go ahead and go through some of these. How's the best way to learn when to buy and sell the stock? I mean, I think this is the power of the PoweX analyzer. The PoweX analyzer is using entry rules that Markus and I have created, analyzing stocks, looking for trends, looking for entries based on how a stock's moved. So that's exactly what we do with the PowerX analyzer and this method. A question, sell to open, does this mean the same as shorting a stock? And yes, sell to open would mean that you are looking to short the stock and profit from a stock that is declining. Now, you do need a margin account in order to sell short. So you need to be authorized to sell short. You need to sign up for a margin account with your broker in order to do so. Now, when you are selling short, your broker needs to locate shares that you want to sell, and your broker either needs to have them available based on the accounts that your broker has, or your broker needs to borrow them. And if you're using a large broker, that normally isn't too much of an issue, and some brokers publish a short list every day that you could see if the stock that you're looking to short is on that list. However, this is also where options can really be valuable, because even if you would rather trade stocks and you're not as interested in options, there's going to be a time where you see a great short selling stock candidate and you want to sell that stock, and it's possible that that stock isn't available to short, right? But most likely there's going to be puts on that, right? And with a put, you can profit from a decline in that market. And with a put, you're going to be able to buy that put and not have to worry about a margin account, not have to worry about whether those shares can be located, and not have to worry about anything that goes along with short selling. So I think that all traders, if you want to trade both directions, if you want to be a buyer and you also want to be able to sell short or profit from a declining market, I think that it makes sense to understand options at the very least and consider them, because they could be a nice alternative to any buying that you do as a stock trader. Okay. Let's see. And there was a question a while back, with PowerX, is there a preset setting that is optimal use? Now, the indicators are automatically preset for you. If you go to View, I like to remove the PowerX indicator panels, right? If I click on this, you see the indicator panels. This, to me, at first I was using this to make decisions, these indicators, but everything's programmed into the actual chart. So if I go to View and I remove it, I just have more real estate, I have more screen space. To me, it's cleaner. And all of that information that's in the indicators is programmed into the actual bar coloring here and the entry and exit signals. So you don't need them up when you're using PowerX. Okay, a few more questions. Let's see. Yeah, this was a little earlier. Thomas, I think that we targeted that. That was about the ABIO. Yeah, it's up to you to decide if you want to take the trade. If not, go ahead and skip it. And we suggest using 12 months. This is what will come up by default. You can always adjust it if you want. When you go to add a symbol, you can select the historical period, but we suggest 12 months. Okay, thanks for the feedback, everybody. Good job, Scott. Yep, that's a good idea there. Okay. There's a question, does PowerX signals work with inverse stocks? Yes, they can. It definitely can work with inverse stocks. You could always add them to your watch list, and then if you have the settings to automatically optimize after adding a stock, it will optimize. This is what we suggest. It's under settings. Otherwise, make sure you optimize it. But some inverse stocks might not trend as nicely as you would expect or hope for, and the performance might not be what you want. This is why we like to run the scanner each day, focus on those stocks instead. And to trade options, you do need to be approved by your broker. Just, you could fill out an application with your broker and find out the requirements there. It isn't too difficult, but I think that many times they want to see that you have some liquid assets, and they ask if you have options trading experience. So if you have practiced and you've spent time on your options education, that's great. Okay, perfect. Well, I hope that this session was valuable. I think PowerX Analyzer, we tried to make it as easy as possible to use, where pretty much everything you need is right there in front of you. We talked about charting software, trading platforms, and brokers yesterday, and that's where, if you're just trading stocks and options, uh, we've tried to make the PowerX Analyzer so you don't need to do any extra analysis with different charting software, right? All of the signals, all the information you need is here if you're a stock and options trader, and then you just need to use your broker's trading platform to place trades. So that's going to do it for today's session. I hope it was valuable. Hey, everybody, have a great trading day, and we'll see you back here for coffee tomorrow. Take care, everyone.